Ron, final question for you, and really appreciate your time today. Could you talk a little bit about LLC incorporation partnership? Because I know as people are looking at buying properties, that's a question that's going to jump to the front of their mind.
Okay. When you buy real estate, let's say husband and wife are buying real estate. Their first question is, how do we own it? Well, we'll go backwards. If you decide to form a corporation to buy the real estate, it's a bad idea because you get double taxed. You get taxed when the corporation sells the property, and you get taxed when you get the cash out of the corporation, the dividends, so double taxation. So you generally don't put real estate into a corporation, a C or an S corporation. That leaves an LLC, a partnership, pretty much the same thing, or personally owned. An LLC would be more than one person generally, and there are similar LLC, but for this intent, this part of the conversation, we'll look at an LLC with two people. So an LLC would be an entity. You buy a 3-family in Dorchester, you decide you want to renovate it and operate it and rent it, you form an LLC. The LLC owns and manages the property. It distributes a K-1 every year to the investors, whether it be 2 or more people. It files a Form 1065. It's separate and distinct. Whatever the net income or loss, like I said, goes out on the K-1 to the investors. The investor then picks it up on his tax return as an income or loss. If you were husband and wife and you decided to buy a piece of property the same way, technically you can be a single LLC, which means the husband owns the real estate, and if that's the case, you'd have a legal protection, but there'd be no separate return. It'd be reported in your personal tax return to Schedule C or E based on how you operate it, but there'd be no separate tax return. But if you decided to put your wife on the property and you both own it jointly, because there's 2 people and a similar LLC is 1 person, you'd be in the realm again of an LLC or a partnership, required to file your own tax return. That has benefits to it. You're able to show the bank and any other lenders just that return. You don't have to expose your personal return. You get the same legal protection, but the downside is there's a fee for doing it in Massachusetts. There's an annual filing fee of $500 a year for an LLC. There's a cost of the tax return prepared, and also you have to deal with IRS audits at the partnership level versus your personal level, and which area the IRS wants to concentrate on more often than not. So you might increase your risk based on which way you go. But basically that's the differentiation.
Terrific. Thanks so much, Ron. Ron, thanks so much for your time. It's great to answer a few questions. I'm sure there are going to be many more. Please feel free to call Ron at his office on Belgrade. He's at 415 Belgrade, just around the corner from West. He's a local guy. Went to CM. He's a great guy. He's got a terrific amount of experience in real estate and other businesses. So please, this is just the tip of the iceberg for real estate questions. Feel free to give him a buzz. Ron, thanks so much.
Thank you, Rob. Appreciate it.
Thank you.